Welcome to my channel, and in this video I am going to show you an easy strategy to use when future trading. Currently I am on the Binance future platform. This is what I am going to be using in this video. Before I start, as always, this is not a financial advice, so always do your own research. The first thing we are going to do right now in order to use this strategy is to go over the trading view section right here. You click on this. Now this is the chart we are going to use. We are going to use the price chart directly from trading view. Now let's expand this. With my strategies, I always use minimum of 2 indicators, and in this video I am going to teach you how to configure this indicator and how to use them perfectly when trading. Currently, as you can see, I am on the 15-minute time frame. The first thing we would have to do right now is go over to this section right here, send the chart from candle to line, and this is what we are going to select right here. The line chart is a clear representation of asset you are looking at. This filter out all the noises, so all this candle wick in this pie chart would be eliminated. What I am going to using in this chart. First indicator we would have to use this strategy is your basic exponential moving average, and to access this indicator we would have to go to the indicator section and search for EMA. First result is what we are going to click. This blue line is the exponential moving average. Now we would have to configure to moving average to fit perfectly to this strategy right here. You click on this. Let's change the style. Let's make the color purple. The next step is go over to the input section, and we are going to change the length from 9 to 200. Right now we are going to use exponential moving average. Okay, as you can see, the 200 exponential moving average, this is this purple line, and the blue line represents the price of the asset you are looking at. In this case we are looking at the Bitcoin USD price chart. The way we are going to use this exponential moving average in this strategy is that when it comes to trending, we have to identify the trend. You are in the either is an uptrend or downtrend. So when I'm using 200 lane exponential moving average, it show me whether I am in uptrend or downtrend on the 15-minute time frame. So this is very helpful when trading. I am going to show you an example right now of what I'm talking about. You can see clearly here the price went below the exponential moving average and close above. When this happened, you can see that the price went from downtrend right here to an uptrend. So as you can see from this level, the price continue an uptrend direction. If you scroll forward, you would see that we configure in an uptrend because the price was above 200 exponential moving average. Another thing you need to know is in uptrend, when price come down and touch 200 exponential moving average, the EMA would tend to as a support. So this support the price is in uptrend. Now let's go over another example. You can see clearly here that the price went from a downtrend to uptrend. Price 10 go to higher in the nearest future, as you can see, and when the price come down and touch the 200 exponential moving average, it 10 act as support. As you can see, support is the price. Understand? Let's go forward. So this is support, as you can see right here, the another support in the price until the EMA gets broken to the downtrend. So once the EMA gets broken to the downside, then the downtrend is confirmed and you would have to looking to short instead of long. Basically in uptrend you are looking for long, but in downtrend you look for short. So this is the first phase of strategy, identifying an uptrend and downtrend. Also I need to show you an example in a downtrend. Now let's back in price. Now this is an example of downtrend using this strategy right here. This was where the price broke this 200 exponential moving average and the downtrend was confirmed. Every time the price goes back to touch this 200 exponential moving average, the purple line right here act as a resistance. Understand? So you can see resistance right here, second resistance right here, and third touch right here. is another resistance. So in downtrend, this 200 exponential moving average act as resistance. The second thing we are going to do right now is bring out another indicator. This indicator we are going to use in the super 10 indicator. To access the indicator, the super 10 indicator, this is indicator we are going to use this video. Before we continue with this strategy, let's make a few sense. Go over to the setting right here, and I would edit this style to super 10 indicator. This red and green line, as you can see, the price chart represents the super 10 indicator. Basically how I use this indicator is that is going to guide me entry and exit. That's mean when I want to enter a position, I'm going to enter it based on signal of the super 10 indicator. So if it flash a red signal in a downtrend, that's mean I am looking for short, but if it flash a green signal in uptrend, that's mean I am looking for long. Understand? Right here you can start. If it flash a red signal in downtrend, so if I had a take my short, I would have gotten a chance to take a profit a lower level. You can also see next it's green signal. You would have to neglect this green signal because it flashing you this signal in a downturn, and you know that a downturn you're looking for short, not longs. You have to use this strategy based on this set of rules. Understand? Let me show you another example using this strategy right here. You would see that the super 10 indicator is flashing a green signal. It is flashing the green signal in an uptrend, and you know that an uptrend is when the price is above the purple 200 exponential moving average. These two confirmations shown an uptrend. So what I would basically do is to enter a position right here. Let's highlight your risk to reward ratio. To do this, we would have to go over to this section right here, click on this and select long position. As you can see, if I had entered this trade right here and taking my profit at this level in level, this is a very good risk to reward ratio. As you can see, this is 2 to 1 risk reward ratio. That's mean I will be losing less and gaining more. So that's basically how you use this tool, and we can go over another example. This is a downturn using this strategy. As you can see, this super 10 went from a green to a red at this particular point right here, and the price was trading below the purple 200 exponential moving average. Now these are the two confirmation. If I was entered this, I would have entered my position at this level with a 2 to 1 risk to reward ratio. Now let's bring out our to, so I would have entered my position at around this level, my stop loss at the highest point right here, and I am going to with 2 to 1 risk reward ratio. Now let's go forward in price to see if this trade would have played out. As you can see, if I had used this strategy, I would have entered at around this point with a 2 to 1 risk reward ratio, and I would have gotten a chance to take my profit as a lower level the price when exactly to my target, and I would have taken my profit at around this level. So this is basically how we use this strategy. It is a simple strategy that anyone can use, just need to follow basic trading rules, and this strategy can turn out to be a very profitable. I truly hope you enjoy this content, and if you did, you can give this video a thumbs up. It really means a lot. I would really appreciate it if you do, and also consider subscribing to this channel as I post content like this to help you on your trading journey, and I will see you in the next video. Thank you for watching.